Hello.
Yes, over to you, Vikas.
Yeah.
Welcome.
Good morning, everyone. First of all, I would like to thank Kanak ji for giving me the opportunity to share my uh, regarding the books I want to share. Money Master the Game. Money Master the Game basically it's a book written by Tony Robbins about the 7 simple steps to achieve financial freedom. We all know that financial freedom uh, for our clients is very much important. So the author explains easily the 7 simple steps. Tony Robbins is an American author, coach, speaker, and philanthropist. He has written several self-help books and he is known for his infomercials and seminars. He is one of the top business intellectuals in the world. Money Master the Game is the book in-depth analysis and one-to-one interviews with more than 50 financial experts. The end result is a 7 step for achieving financial independence. The author works readers of all income levels through the steps of building lifetime income plan in order to become financially free. This income strategy is backed up by look into the portfolio of Ray Dalio, one of the most prolific investors in history. So, in the simple way, he explains the steps to achieve the financial freedom. In the first section, he talks about greetings from the jungle. The journey begins with the first step. Whenever it comes to investments, he talks that it's your money, it's your life. So we should take control. So before investing, we should completely have an idea where we are going to invest, and we should completely take the control. And he also explains that uh, to create an income for life so that we can financially free. And the most important decision, whatever we make in our life, should be the financial decision we should make in a proper and effective way to achieve financial freedom. So he in these books he completely explained. So the each and every financial decision is very much important. So we should wisely take the decisions before making any investments. So he also speaks that become an insider, know the rules before you play. Whenever we play a game, always we should know the rules. What are the pros and cons about the game? So he explains that there are 9 financial myths because money is such a misunderstood topic. So uh, we should first know what are the myths generally before investing and making our financial decisions. If you want to begin developing correct understanding on how money works, you should stop believing these myths. So the author explains that we should not believe these myths. In a proper way, we should first know what is the 9 myths the author want to explain. The first myth is that invest with us, we will beat the markets. Nowadays everyone speaks that will beat most of the most of the distributors and other financial advisors, financial experts explain this: invest with us, will beat the markets. But the author completely says that just only 4% actively fund managers outperform the market. So it is a complete myth that the financial experts or any person who is giving a advice can beat the market. So actively fund manager can outperform the market. The author explains that index fund is also the one of the best option to as per market condition, that the returns may be good, but only 4% actively fund managers are outperform the market. So second myth is when it comes to fees, they are small price to pay. The author explains that before investing, we should know what are the expense ratio and what are the fees we are paying. So the author explains that in mutual funds is almost 3.17% fees as per the author. So we should consider the funds before investing. So fees matters a lot as per the author. Myth number 3 is when it comes to returns, what you see is what you get. Most of the times, returns are not in our control. So people normally says the returns whatever I'm explaining you will get, but it is also a complete myth. The fundamental truth about investing that avoiding losses is much more critical than achieving profits, because we always speak about profits, but we don't talk about losses. For example, the author explains a portfolio of $100. If the market crashes, can come to $50, and again the market if increases 50%, the $50 and again come to $75, but it does not come to $100. So the average return is 0%, but it's a real return. You are losing 25%. $25. So we should also consider our losses, and before investing we should always decide how much profit means we want to make and how much loss we can occur. So both should we consider. Another myth is that the broker supports you. The author explains the broker may support you, but it is also a myth. The before deciding a broker, as per author, we should decide what are the qualifications, whether he is properly in this proper financial field or not. We should before investing we should also decide the broker. The broker is responsible for both our money and the money of his firm. So broker should be fair and trustworthy as per the author. And the author explains that RI is also a good option to make any financial plan. So the broker or mutual fund distributor, we should before investing we should, as per the author, we should go depth analysis before investing. Your myth number 5 is your 401k would provide you a comfortable retirement. So 401k is basically in US. Normally, what happens? The employer contributes, and for the employee and contributes for their pension retirement. So the author it explains that it is only a simple little changes in your retirement life it can make, but for your retirement you should think and you should invest. You should not depend upon this 401k scheme as per the author. So before investing and before your retirement plan, you should wisely invest as per your requirement, as per the author. Another is target date funds are a good way to diversify your portfolio. As per the author, you should decide your funds depending upon the age, because if a young age people can invest in a equity portfolio, and if a higher age people can invest in a mix-up portfolio. So the authors explains depending upon your age and depending upon your target date, what is still you want to achieve. Depending upon this your target date, you can adjust your investment mix depending upon your age, so that your in future your returns will also be good and it will be conservative. Another myth is that annuity are bad investment as per the author. So normally what happens, we always think that annuities are a bad investment. One form an annuity, the author explained, it is a tax-free fixed indexed annuity. It's a great way to save. Normally after retirement, everybody needs money. So as per the author, it is a big myth that annuities are a bad investment, but really if we plan and we plan accordingly for retirement, annuity is the best option. Everyone should prepare an annuity plan to achieve their retirement goals. Myth number 5 as per author is, if you want to make a lot of money, you have to take a lot of risk. Generally what happens, people think that we should take a lot of risk to make money, but as per the author it is not true. We should structure bonds, marketing CDs, and fixed interest annuities are also the same way to minimize risk in exchange of possibility of large profit. So the author explains that there are different products in the market which are you can take minimum risk and you can make more money. So before making an investment, you should decide what are the risks involved, and there is not required that you should take a higher risk to achieve higher money. As per the authors, the bonds and marketing CDs are also the best option. The myth number 9 is our ability to succeed is determined by factors outside our control. Author says that we should have a complete leverage over our financial well-being. So to succeed, you must change your attitude. For financial well-being, we should have control in our hand only. The section 3 explains make the game winnable. What is the price of your dreams? As per the author, we should make our dream first and calculate the amount of money you want to achieve for your dream. Nowadays, most of the people's plan as per their dream. The author clearly explains that to achieve financial stability, financial independence, and absolute financial independence, we should calculate our money, how much amount we want to invest to achieve that dream. So before making any investments, we always consider our dreams to achieve the financial goals and financial independence in life. Section 4 clearly explains, as per the author, the fourth step is make your life's most important decision. What decision we should make in our life that completely depends upon us. So the decision should be in a proper way we should make our decision. Asset allocation is the key as per the author, and categorizing assets into three categories: stability, risk, growth, and dream. The investment decision should be an important decision. So before making any investments, any decision, you should make in a proper and effective way. The fifth section is creating a lifetime income plan with no drawbacks. So as per the author, lifetime income plan is very much important for retired life and with no drawbacks. So this is also a myth that creating a lifetime income plan with no drawbacks. Diversification by Ray Dalio. Ray Dalio is a investor, so he also clearly explains that diversification is the best way to achieve our lifetime income plan. So increase your risk diversification and using insurance. The author explains using insurance, fixed index annuities is also a good option to achieve our lifetime income for our future goals and future retirement plan. So insurance is also a good option as per the author. And the section 6 and 7, the author clearly explain just do it, have fun and tell everyone about it. Money is only a part of living a good life. Money, you can use money to buy experiences, time for yourself and give to others. So the author clearly explains that money is good, but we should consider the and make our life happy to create so much money said that will be sufficient to achieve our financial goals and financial independence. So money can buy experience, time for yourself and give to others. So we should use in an effective and a proper way the utilization of money. As per the author, the money can't bring complete happiness. The happiness is we should consider in a money in a proper way so that it can create our life happy. So I had shared my books in a simple and very short. So the famous thanks for patience listening, and a famous quote, it is written by Nelson Mandela: it always seems impossible until it's done. So the author completely explains in this Tony Robbins about these 7 simple steps to achieve financial freedom, that before making any investments, we should consider these 7 steps so that we can achieve our financial independence and financial freedom. So we should make our investment decision wisely before making and before advising someone for making investments. So I had made it very short and simple way. Thanks, Kanakji. Thanks everyone for patience listening.
Thank you so much, Vikas. I presume like this was like one of your first presentation at this forum. Thank you so much. It was really nice. You really got confidence building, and the content and the presentation was really nice. Your clear content was there. We really look forward to listen more and more from you in the coming days. It is really nice. Thank you so much
Yeah,
for
yeah,
all the preparation.
yeah. Thank you, thank you.
Yes, yeah, boom, boom, boom. Especially for Vikas, because I'm sure this is the